Today, Bitcoin plummets to its lowest level since July 2021. Galaxy Digital CEO Mike Novogratz expects more volatility, and Noelle Acheson of Genesis explains what's driving the crypto sell-off. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto prices tanked over the weekend. In the past 24 hours, Bitcoin dropped below the $33,000 level. By noon today, Bitcoin was worth about $32,000. Ether, meanwhile, fell to the $2,300 level, and Solana fell below $70. Okay, on to the top stories. Galaxy Digital CEO Mike Novogratz says expect more volatility in crypto, at least for the next few quarters. Novogratz said in Galaxy's earnings call this morning that he expects, quote, more damage to be done and that Bitcoin could fall to around $30,000. The company reported a $111 million loss in Q1 and attributed most of that to falling digital asset prices. Next, NFTs are also feeling the pain this week. Weekly trading volume for non-fungible tokens fell 28% amid the pivot from riskier investments. Bored Ape Yacht Club saw a 51% decline, and Yuga Labs' new NFT offering, Other Deeds, saw a 43% drop-off. Both of those are according to NFT Go. The firm also reported that despite falling volume, prices remain high. Finally, the DOJ just indicted the CEO of a crypto mining company over an alleged $62 million pyramid scheme. Luis Capucci Jr.'s business, Mining Capital Coin, promised investors it would mine cryptocurrencies, but instead, Capucci allegedly diverted funds to his own wallet. The DOJ also accused him of luring investors with rewards like luxury watches, tech gadgets, and sports cars in a pyramid scheme. If convicted, Capucci could face up to 45 years in prison. Okay, let's focus on markets and what investors are watching. I spoke to Noelle Acheson, she's head of market insights at Genesis, about what is driving this recent volatility. Bitcoin today falling under 33,000. Would love to get your take on what is causing this. Why are we seeing so much weakness right now in Bitcoin prices?
Well, you probably, I'm sure all of your viewers have noticed also, it's not just the weakness in Bitcoin prices. Markets across the board are red. I mean, seriously red. And many of us taking a step back will acknowledge that we've sort of been waiting for this. We've known that things were really strained in the markets for some time, the continuing new highs of the S&P 500 in the face of the supply chain crunches, the inflation creep, and the strain on the global economy more broadly speaking it was just odd. It was disconcerting. To see the markets finally wake up to the reality that the global economy is facing is somewhat, ironically and perhaps in a contradictory manner, somewhat reassuring that finally we are acknowledging that things are difficult, that prices need to correct. And crypto prices are an extension now of risk markets. They have been acting as an extension of risk markets for many months, and this is largely due to the changing nature of the markets, specifically the entrance of institutional investors who treat it very much as a risk asset. And this shakeout that we're seeing now is the healthy flush that all weak markets need in order to be able to start to rebuild.
So as far as the flush, how far into that do you think Bitcoin is? I don't know if I'll ask you to call a bottom necessarily, but is that necessary for Bitcoin prices to go higher? Some of the maybe short-term holders or just some of the capitulation to be flushed out? What do you anticipate in terms of possible strength going forward and a rebound here?
Well, the obvious answer is yes to all of the above. And I do have to say that these are my opinions, not those of my employer. Nothing I say is investment advice. But in my opinion, the capitulation does have some way to go still. The markets are weak across crypto and fairly heavily as well. Some of the falls that we're seeing today are eye-watering. And exactly how much lower does it have to go? I don't know. Technical analysts are telling me there's another support at 30K. We could see it go below that, in which case it could go a bit further. But the volumes will weaken the lower it gets, because we have seen time and time again that there is a floor to Bitcoin prices. We've seen time and time again that when it drops, support does materialize. The on-chain accumulation that we've spoken about before, Kate, is still strong. We are seeing longer-term investors continue to sock Bitcoin away in their longer-term addresses. That said, this week is slightly different in that we are seeing longer-term holders exit the market. And obviously not all of them, but we are seeing more of them exit, and more of them do so at either break even or a loss. This is the signal that we've been waiting for, that we are in the capitulation phase of the market. And yes, I do believe that this flush out is necessary to start shifting the narrative that Bitcoin is not just a risk asset, that it is a longer term store of value with a hard cap. And we're starting to see some of that narrative shift show up in the correlations. We know that Bitcoin is more correlated than ever in its history to the S&P 500 and NASDAQ on a shorter term. But we're seeing a shift in some other correlations. I was looking this morning at the correlation between Bitcoin and the DXY index. That's bounced over the past few days. Why? With so much uncertainty in the market? In my opinion, it's because we are starting to see the narrative divergence. There will always be investors, Kate, that do see Bitcoin as a longer term play, just as there will always be investors that do see it as a risk asset. Recently, the risk asset investors, they have been setting the prices, but as they leave the market because of the risk aversion, then the control of the price setting shifts to those that see it as a longer term asset. And the fact that Bitcoin has been stored increasingly in longer term holdings means that there is less available for new entrants should they decide that at these prices it is relatively cheap.
And is that what it'll take to become decoupled or just not as correlated, at least, to tech stocks in particular and to broader markets? The idea that
Yes.
a certain class of investors needs to sort of be flushed out so that the long-term holders are the ones setting the price?
Exactly. You put it very well. That's, again, my opinion, not that of my employer. But if the risk asset investors are treating Bitcoin as a risk asset, then they are the ones that trade more often. Therefore, they are the ones that set the price. The price is always set by the last trade, whatever its motive. When they leave the market, and notice I say when they leave the market, then the control of the price setting shifts to the hands of those that are accumulating for the longer term. Again, this shift will, like all shifts, be temporary until it is seen again as a risk asset and the new type of investor comes back in. But the difference this time, Kate, is that there's less available for those investors when they do come back in. So when we see the move up, it will be sharp. When that will happen, I don't know. This is very much like catching the proverbial falling knife.
That's all for today, but be sure to head over to cnbc.com/crypto world for more coverage on the crypto sell-off. We'll be back here again with a lot more. We'll see you then.